Welcome back to the channel, everyone. I've got some very encouraging and potentially game-changing news for millions of Americans who are either preparing to file their taxes or have already submitted their return, because the IRS is getting ready to send out billions of dollars in refunds. And this year, there is a very real possibility that many of you could see your refund grow by as much as an extra $1,000 compared to what you normally receive. And that is not a small bump. That is a serious difference that could help cover rent, groceries, overdue bills, car repairs, medical costs, or simply give your family some breathing room in a time when prices are still high and budgets are tight. So I need you to pay very close attention to what I'm about to explain, because timing, filing method, and eligibility for certain credits could make all the difference in how much money ends up hitting your bank account and how quickly it arrives. And before we go deeper into the details, I just want to quickly ask you to press that like button, because it truly helps this channel reach more people who need this information. And now let's break this down step by step so you understand exactly what's happening and what you should be doing right now. The IRS expects roughly 164 million Americans to file tax returns this season, which is an enormous number when you really think about it, and historically the average refund has already been significant, last year hovering around the low $3,000 range for many households, but analysts are projecting that due to tax law adjustments, withholding differences, and expanded credits, refunds in 2026 could average up to $1,000 higher for qualifying taxpayers, potentially pushing that typical refund toward or even above the $4,000 mark for many families. And that is why this filing season is so important, because even a few small decisions you make right now, such as how you file or which credits you claim, could directly impact whether you see that larger amount or not. One of the biggest changes you need to understand involves how refunds are being distributed, because mailed paper checks are increasingly being phased out in favor of direct deposit. And if you are still waiting on a physical check every year, you could be slowing down your own money without realizing it. Direct deposit is by far the fastest way to receive your refund once the IRS finishes processing your return. And when you file electronically and choose direct deposit, many refunds are issued in 21 days or less, sometimes even sooner depending on your situation, whereas paper returns can take 4 weeks or longer, and mailed checks add even more delay on top of that. So if speed matters to you, and let's be honest, it matters to most people, enrolling in direct deposit should be at the top of your checklist. Now let's talk about why refunds may actually be larger this year, because this is where things get interesting, and it comes down to two primary factors. First is how much tax you paid throughout the year through withholding, and second is whether you qualify for refundable credits that can significantly boost your refund beyond what you paid in. And this is where many people miss out simply because they don't realize they qualify. Refundable credits like the Earned Income Tax Credit and the Child Tax Credit can dramatically increase what you receive, even if your overall tax bill is low. If you paid more in taxes throughout the year than you ultimately owed, you are entitled to receive that difference back. That part is straightforward, but even if you did not overpay significantly, refundable credits can still generate a refund for you, which is why filing a return is absolutely critical, even if you think you don't owe anything or don't normally file, because without filing, you cannot claim those credits, and you have up to 3 years to claim a refund before it expires, which means there is money out there every year that simply goes unclaimed because people either did not know or assumed they did not qualify. Let's break down the Earned Income Tax Credit, often called the EITC, because this credit alone can mean thousands of dollars back in your pocket if you meet the requirements. Eligibility depends on your earned income, your filing status, your number of qualifying children, and your investment income limits. And for many working individuals and families earning below certain thresholds, this credit is designed specifically to provide relief and boost take-home resources. If you are single with no children, your income must fall below a certain cap to qualify. And for married couples filing jointly with 3 or more children, that cap is significantly higher, which means larger families with moderate incomes may qualify for a substantial credit amount, and that alone could account for a big portion of the projected $1,000 increase people are talking about this year. Then there is the Child Tax Credit, which can be worth up to $2,200 per qualifying child depending on your income level and eligibility factors, and for families with multiple children that number adds up quickly. To qualify, the child must meet several requirements including age, relationship, residency, and citizenship criteria, and your income must be below specific thresholds, generally $200,000 for single filers and $400,000 for married couples filing jointly to receive the full credit. And even if you do not owe much in federal income tax, you may still qualify for the additional child tax credit, which can provide up to $1,900 per qualifying child as a refundable amount if you have at least $2,500 in earned income. And that is why so many families could see significantly larger refunds this year. Now, while all of this sounds promising, there is another reality we need to discuss, and that is processing times and staffing challenges at the IRS, because the agency has experienced workforce reductions over the past couple of years, dropping from around 102,000 employees at the start of 2025 to roughly 74,000 after various layoffs and restructuring efforts, and fewer employees can mean longer wait times for customer service and potential processing delays for complicated returns. So if your tax situation is straightforward and you file electronically, you are more likely to experience a smooth and timely refund. But if your return involves amendments, corrections, identity verification, or complex income sources, it may take longer, and that is why planning and filing early can work in your favor. The IRS itself advises taxpayers not to rely on receiving their refund by a specific date when planning major purchases or paying large bills. And that is very important advice, because while many refunds do arrive within the 21-day window for e-filers using direct deposit, there are exceptions, especially for returns claiming certain credits that may require additional review. So if you are counting on that money, wait until it is actually in your account before making commitments. And consider setting aside a portion for savings or emergency expenses before spending the rest, because refunds can be an opportunity not just for relief, but also for financial stability if handled wisely. If you are wondering how to check your refund status, the IRS provides an online tracking tool, commonly known as Where's My Refund, which allows you to monitor your return's progress typically within 24 hours after e-filing or about 4 weeks after mailing a paper return. The tool updates once daily overnight and will show when your return is received, approved, and when your refund is scheduled for deposit. And to access it, you will need your Social Security number or individual taxpayer identification number, your filing status, and the exact refund amount shown on your return, so keep those details handy. Another key point is how you choose to file, because over 94% of taxpayers now file electronically, and for good reason. It is faster, more secure, and reduces errors compared to paper filing. If your tax situation is simple, you may qualify for free filing options, but if your finances are more complex, involving self-employment income, multiple deductions, investment transactions, or major life changes, working with a certified public accountant can provide peace of mind and potentially uncover credits or deductions you might otherwise miss. And while I am not a CPA and this is not financial advice, having professional guidance in complex situations can sometimes result in a larger and more accurate refund. The big takeaway here is that two main forces are working together this year to potentially increase refunds: updated tax provisions that expand or adjust credit eligibility, and the possibility that many taxpayers over-withheld during the year due to cautious payroll adjustments. And when those factors combine, the result can be a noticeably larger refund for millions of households. And in a time when inflation has stretched paychecks thin, that extra $1,000 could feel like a lifeline. So here is what you should be doing right now. First, make sure you gather all your tax documents, including W-2s, 1099s, and any documentation related to credits you may qualify for. Second, file electronically if possible and choose direct deposit. Third, double-check eligibility for credits like the Earned Income Tax Credit and Child Tax Credit. And fourth, monitor your refund using the IRS tracking tool rather than guessing or relying on rumors. And remember, you have 3 years to claim a refund if you missed filing in a previous eligible year, so there may be additional money waiting that you did not realize was available. For many American families, this annual refund is not a luxury. It is a critical financial event that helps stabilize household budgets, catch up on essentials, or invest in necessary expenses, and with projections suggesting up to $1,000 more for some taxpayers in 2026, understanding the system, filing correctly, and claiming all eligible credits has never been more important, because leaving money unclaimed is something no one can afford right now. If you found this information helpful, make sure you press that like button, share this video video with someone who needs to hear it, and subscribe to the channel so you never miss important updates about IRS refunds, tax credits, and government payments that could impact your financial future. And as always, thank you so much for watching. Stay informed, file early, choose direct deposit, and I will see you in the next video very soon. Take care.